Well, good afternoon, everyone. Hey, it is Shooter. Hey, we are going to go over primary waves, our dividend stocks for September. Of course, at the end of our presentation, please do review our disclosures. Just covering the markets for a minute. It was an eventful week for sure. The Fed, sort of had a surprise 50 basis points cut, even though I think we all saw the potential for that coming. Now that's the first rate cut since 2020. And we have some repricing going on. And I think we still see repricing next week because last week we had OPEX. Now also we have seasonality as an issue to deal with. Historically, September has had lower performance, between 3 and 8% off of the October highs typically. So, commodities are a big factor, I think, because China's still slowing down. It's still stalling out. So we're particularly concerned about that. We'll be keeping our eye there. Now, overall, I think traders have adopted a cautious but hopeful stance. I think I'm in that camp. We're balancing that the Fed's dovish shift with the uncertainty of the macroeconomic conditions, primarily in the Middle East. However, the tone that I've seemed to hear between a lot of the technicians and the traders I've come to really respect over the years, their thought is we drop, then we pop kind of thought. Or we dump, then we pump. So, I'm still hesitant to put too much on, but we do have a lot of setups, and that'll be covered in swing trade notes a little bit later on. But let's take a look at our September dividend stocks. Let's start off with, Ford. It currently shows we're likely completing an intermediate wave B. With an expected retracement towards the 2004 level, which is right up here in this range. Really, we're at trend support. We've overshot it, so we're testing the band now. It's an overshoot. On a second drive grouping, I look at this as, we could consider this a second drive grouping, but we're in this band. I don't know that we break out of this because this, sometimes these are 1, 2, 3, 4, 5. So, they could go out quite a little bit in time. I've got my vulture price down around 774. Currently, the count gives me a back test wave 2 around 785. Now, I get much more interested in that 785 than we are at this 1087, just from the look of the chart. That's my 2 cents. Now, innovative industrial properties. We've covered this one for quite a little bit. Currently pushing into intermediate wave 5 around 143.05. That's this number right here. Then we should get a decent back test. Now, I've noted, as far as the trading strategies, consider scaling into common shares on any pullback to 125 or so cash secured puts at that 125. So I'm seeing a significant pullback after that wave 3 completes. Now, of course, it would also open up the camp for some covered calls to be sold up there. I'd give it a little room, maybe $1.50, and just take your premium there unless you can get a really good price that you can't resist. Reason is because 50% back on this whole leg measures to 200. So, I'm hesitant to put too much on there. But by all means, somebody could sell a piece of their position. Let's say you have 500 common shares. Heck, you sell covered calls on 200 of them and plan to buy them back once we get into that wave 4. Now, obviously, I don't know your tax circumstances, so obviously, seek advice from your tax advisor. So let's take a look at Coterra Energy. Now, the current wave, likely an overshoot of a primary wave 2, testing support around 1718. Now, the potential upside is about 3466. So, to me, we're just overshooting this just a little bit, this trend that's sort of built right here. We really need to hold this 23.6 fib. Gets below there, really it opens up this support down here. So, it's pretty viable. I've got a new primary wave set up on it, so it's a good spot to scale in. In particular, 23.18 as far as scaling in, maybe some cash secured puts. So I don't think, any pullback, it's in between here and our setup. I don't think we get a little bit further down there. Then our upside's around 32.62. So we got some decent upside there. All right, now Pfizer. Let's talk about this mess for a second. We've extended. We did have a primary wave. We now failed to break above resistance here. We've now back tested the lows. Count suggests that we're going to continue lower. Breakdown for an intermediate wave 5 or a cycle wave C down around 21.55. So depending on whether or not you have a position in PFE or not, would depend on what I would do. I wouldn't add to the position here. I would wait till we break that 25.20 price. So this low at that point, you could start scaling at 25 if you don't have a position. Now you could sell some covered calls here. If you do hold this position, you're holding that roughly about 30 bucks, 31 bucks. Not sure exactly what your cost average is, but I don't think we get back above that. So if you go one standard deviation up from where our high is, maybe right around 35 bucks, I think you should be fine doing that. All right, let's take a look at STAG. Primary wave 4 back test to around 41.62 offers a key inflection point. So, we're back testing wave 4. We really need to hold that 382.6 fib, for continuation. Otherwise, we could back test trend support. Realize these are pretty aggressive drawdowns. I mean, it's fleeting, I guess, is a good word for that. This is shallow. That's bullish. This isn't as bullish as this. Even though we had a nice push and went to new highs, we came back and nearly back test the lows as far as where this resistance band was. That's sort of becoming support. So I would suspect that we do put in a higher low somewhere along this trend line here, just a little bit above where I have this mark from this low and this particular low. So at that point, I like cash puts on any pullback around 38 bucks. I'd scale in common shares from 38 down to 33.85, which is close to the primary. I don't think we get back to that 33.85. Is my thought. Enterprise Product Partners, EPD, is running into resistance at a cycle wave B, prior high around 30.87, which is right here. So way back 2019. Nice push, really hugging trend support. I don't ever like that. There are some stocks that continue to hug it and keep going. Really depends on their business model. So we should get a decent pop here. So we've done our intermediate wave 2, and we're looking to print an intermediate wave 3 and then back test 4 and then put in our 5. So the 30.66 is going to have a little volatility to the upside. So if you're holding, continue. I wouldn't add here. I would wait until we get our primary wave 3 and that back test at 28.32. That would be my 2 cents on that. Now, Vicky, the stock's current price is testing resistance of our 35.69. We should get this little back test to our intermediate wave 4 around 31.57, I think. And then we head towards our primary wave 3 around 36.87. So if you don't have a position, cash secured puts there and or common shares right around that 31.57 if you get the opportunity there. Essential properties, nice pop off of, last week with, the issue with the Fed and the rate cut. However, I think we end around this 35. We could extend them. Realize 78.6 is overhead. So if we start seeing some FOMO go into real estate stocks, which we're really not seeing now, the sector's moving, but not great, kind of leading, but kind of not. We could push up to 39. So you want to consider that. However, I'm not going to hold a $35 stock down to 29. Your business, you're your own captain, you make your own decision, but that's just my 2 cents. I'd take half off and sell covered calls around 40 bucks. That's what I would do in this particular situation with EPL. And that's what we have for this week, folks. Great trading. Until next time.